Welcome to Angel Impact, the official podcast of the Wisconsin River Business Angels. Episode 8, Overview of the Strategy and Appeal of Angel Investing, Part 2. Hi, my name is Aaron Marks, and I'm here to welcome you to this segment of Angel Impact, which is the official investment podcast of the WRBA. And the WRBA stands for Wisconsin River Business Angels, and that's Central Wisconsin's only angel investing group. And I'm here with the leadership of the WRBA. And I have Jeff Ebel, who's the president. Hi, Jeff. Hey, Jeff, can you say hello again?
Hi, Aaron.
Oh, there you go. Okay. And then we have Leon Ostrowski, who's the chair. Hi, Leon.
Good morning. Good morning.
And this is part 2 of a short series, which is a high-level view of angel investing and angel investing strategy. And kind of right at the end of the last episode, we thought it might be just about right to cut that, make that its own episode, and then pick up in this episode with some related topics. And so the last episode largely focused on the difference between debt financing of a business and equity financing of a business. And so if that's something you don't understand, we recommend you go back and listen to that episode. And then we talked about, the kind of a cycle of business investment and where different kinds of equity investment, kind of find their home in that cycle. So those are really important topics to understand. Today, we're going to get a little bit more granularly into the nature of angel investing, talk about some of the strategy and some of the appeal. So I think what we'd like to start with is the general strategy of angel investing. How do Jeff and Leon guide their investors, and what do they recommend to be a productive and successful angel investor? So whoever wants to pick up with that, I know you have a lot to say about it.
I'll start it out, Aaron. One of the things we experienced with our first angel group that I started in the early 2000 timeframe, we found that a lot of investors had set aside a certain amount of money. We would typically recommend that they set 10 to 15% of their net worth available for this type of angel investing. And what we found is they did that. So they ended up with a size of money, which would say $100,000 to $150,000 for every $1 million of net worth. So what they ended up doing, instead of putting that into a variety of projects, we would typically say 10 to 15 projects, which would be about $10,000 a piece for every $1 million of net worth. These people ended up spending too much money in too few projects. So they ended up not building a portfolio of 10 to 15 projects. They ended up blowing their total allocation with maybe 3 to 5 projects. And what happens there, if you hit it big, you're great. But if you don't hit it big, you end up not looking very good on your investment. So you got to have the portfolio approach if you want to take that project and get the returns of, I say 25%, which is not uncommon for angel investing, is a typical one for the national average. We think what we're doing with our due diligence and other things, we can increase that amount. But I really want to focus on the importance of helping the investor make some decisions to their benefit. And they also want to invest that money for typically 3 to 5 years. But what we find out is when they invest that money with that discipline over many projects, they end up putting across the board. But we try to say, okay, if they're not doing good, let's get out of them early. Maybe we're on the shorter 2-3 time period. But what we also find is when the project is going real good, instead of getting out at 5 to 7 years, we typically find a lot of the investors want to hang in there and run for 10 years, maybe even longer. That's where you get your home runs, because that's a project that's going good. You have your initial investment there, and that's where you can get the 10 to 20 to 30 times your investment on. And that's where the average comes in, that you end up with this pretty high, nice return on your portfolio. So that's the type of process and what we would like to help guide our investors and let them make their own decisions on what they want to invest in.
Yeah. Great. And Jeff, I was wondering if you could talk a little bit about, unless you have anything to add to what Leon said there, maybe you could talk about what's the appeal of angel investing? What do angel investors tend to really enjoy about the process of angel investing?
It's interesting. The angel investors typically have different reasons for getting involved, but there are some common interests that they all share. I was new to the angel investing environment 5 or 6 years ago when Leon and I first started working together. So it was very interesting to me, and I had my own preconceptions about this industry. And I was pleasantly surprised at the level of passion, interest, and genuine concern that the angel investors have for entrepreneurs and for these young businesses. They're very approachable. I didn't find any big egos that we ever had to deal with, although most of the investors we have are very well off, and they probably had reasons that they could be egotistical, but they didn't show that at all. Matter of fact, they were very concerned about the companies that they work with, about the entrepreneurs, and they were putting in a lot more than just money to make sure that they would succeed. So I think the one thing they have in common is they love the passion and the excitement of startup businesses. A lot of them have been involved with it in the past. I had my own business, and there is absolutely something about the enthusiasm and the energy and just starting something new. And I love that feeling. I love working with people that feel that way. And we've talked to a lot of investors. We were just interviewing someone yesterday that said the same thing. Just loves to be around entrepreneurs because they're passionate, they're exciting, and they love what they do. And you'll find that the investors that hang with them also enjoy that about them. They enjoy that about the whole environment of investing, angel investing, and entrepreneurship. So that, I think, more than anything, I think that's the one common thread that they have. The other thing, obviously, they have been successful in their own rights. Most of these investors have had their own businesses and have been quite successful at it. And they want to return that. They want to do something for other people. They want to share their experience and their wealth, what they have accumulated. But they also, they're not throwing it away. It's not... they're not giving their money away. They expect something in return. They want a reasonable return on their investment and for the risks that they're taking. And I think that they all have that in common as well. But they do like to be involved. They like to be engaged. They like to know these people. They like to work with them. They like to share their expertise, their knowledge, their skill set. And just that involvement, I think, is very rewarding for most of the entrepreneurs or the investors that I've worked with.
Yeah. I think you find also the group decision ends up providing a much clearer picture of the opportunity than any one individual's perception of that opportunity. For example, their background and experience will identify weaknesses or strengths in that company's activity in a certain specific area. Maybe technology, maybe management, maybe marketing, etc. But collectively, everybody has a little different view of that. And we got to get back to the entrepreneur to say, do you know the answer to their question or not? And we dig into that. And if the answer is no, then we are looking very closely at them to say, are they appropriate to invest in? Because they may be not willing to take advice, which is bad. But on the other hand, if they say, wow, I never thought, that's fantastic. Most of them understand that they have limited knowledge. So they try to use these investors to fill those blank spots. And therefore, those investors end up advising them or being on their board of directors. So they are taking an active role, and they really like to see their money go to developing the community and the jobs in the area. That's important to many of these people. But they also want a return. Because they're accepting a high level of risk, they should get a higher level return. And with angel investing, they do, providing you play the portfolio approach.
And you mentioned something too, that everyone hears and sees things differently based on their expertise, their experience, life's experience. And boy, I noticed that when we are listening to a pitch from an entrepreneur, and afterwards we get together and we start, we discuss what we've heard, and it's amazing. I think Leon and I do a pretty good job of the due diligence, understanding these companies, doing the research, and understanding where they're coming from. But it never fails that there are multiple people out there that either present questions or perspectives that we completely miss. So the more eyes, the more ears you have evaluating these companies, the more thorough that evaluation is going to be, and the better the chance of that investment succeeding.
There's another dimension that the angel investors like. It's not anything we said so far. It's really their camaraderie, their social interaction with the other angel investors. They have an opportunity to do that with angel investing, where that is less likely with the other types of investing, venture capital, private equity, and the family offices. And I think as they're doing that work, and as the economy opens up, there'll be more interactions. And they say, how do you do that? Well, we get together and have lunch and a presentation, or we'll have dinner and some presentations. So we can try to work this in with their schedule so it fits with their limited time. And of course, we always want to do the work of checking out the detail nitty-gritty, take that off their backs, and on the very end, get its stuff ready for tax purposes, and on the final selling of the company to work through the dynamics of that so they can return the money, reinvest it, or share part of it with us, which they agreed to do. So that's how we get paid.
Yeah, yeah, and that kind of segued, very nicely into just a lot of the benefits of doing angel investing with a group, and then doing angel investing with this group in particular. And I hope that I hope listeners. Sorry, got a little chaos in my room, but I hope listeners can tell that angel investing is a very special kind of investing, and that the WRBA is a very special place to do angel investing. I think you both summed that up very, very well. And I'm wondering if any of you, or if either of you, have any last thoughts that you'd like to leave us with before we close today.
Other than the longer I'm in it, the more I enjoy it.
Yeah.
I love working with these companies. I love the energy again. So I get the excitement of angel investing. I understand it.
Yeah, and I would say if you're new to angel investing or are an angel investor and you want to consider our group, get in touch with Jeff or myself. Go to our website and look at the information there and call us, and we can set up a nice discussion to see where you are, what information you need, and let's get you involved and on board and participating in this exciting activity.
Yeah, and I just want to stress how, I'm not sure if this was in this one or the last one, but one of the themes came up that angel investors are very approachable, and I've certainly found that to be true with both Jeff and Leon. Very approachable, very warm, just very inviting, and I think passionate about economic vitality and development, and that's really something we all have a place in. And so I certainly feel that with both of them. Well, I really appreciate this time together, Jeff and Leon, to talk about the nature and the strategy and the benefits of angel investing, and particularly doing it with the Wisconsin River Business Angels. So my name is Aaron Marks, and this has been Angel Impact, which is the official investing podcast of the WRBA. And the Wisconsin River Business Angels is Central Wisconsin's only angel investment group. And I'm here with Jeff Ebel, who's the president, and Leanna Ostrowski, who's the chair. And we'll see you on the next episode of Angel Impact. So long, everyone.
Thanks, Aaron.
Thank you. Bye.
Thanks for listening to Angel Impact, the official podcast of the Wisconsin River Business Angels. To learn more about the Wisconsin River Business Angels, visit the website at www.midwestwealthventures.com or find us on Facebook.